Jabbly. Morning. I'm going to do a trade kind of in response to a message I got this morning, and then I'm going to have a look at some fibs. So let me make a coffee and we'll go up in the study. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and as you can kind of guess, I am the Scruffy Trader. And today, I'm going to kind of respond to a message I got this morning. It wasn't a bad message, but I think the guy's missing the point a little bit. And then I'm actually going to trade it for you. I've got it running now on the screen. So I'm going to let that play out, finish it, and I'll come back to it at the end. But I'm also going to go through what I did for non-farm payroll and why I used the fibs in the way that I did. Because again, some people didn't quite grasp what it was I was trying to achieve. Okay, and it came from one of the comments underneath the video. But also, I'm well aware one of the scruffyites, Ian up in Scotland, likes fibs. So this one is actually for Ian to show me, or for me to show exactly what it is I'd be kind of looking at. So it's a little shout out to a scruffyite. And that's about it. It's just trying to put trading back in the real world. Because when I read the message this morning, its opening line was, the euros did 20 pips in a minute, so my targets are therefore too small, going from 10, 15, 20, etc. They should be 100 to 200. You've really missed the point. See, when you're day trading, swinging for the fences is the road to ruin. Now, I'm going to go through this in a video that I'm sorting out this week, about how do you make $1 million in a year, and is it possible? And I'm going to show you the maths behind it and stop these idiots.
You ding dong!
Give it to me again.
You ding dong!
Who I think you may have been watching on the land of make-believe, or what you guys would call Instagram, is absolute crap. You know, it's utter rubbish what they're trying to tell you. You know, I've done this a long time. And then when I get comments kind of like that this morning, I think, well, what do I know? You know, I'm touching on nearly 20 years. You're touching on nearly 20 days. I've clearly got it wrong. And I know that sounds a bit cheeky, but you want to see some of the messages that I get. Anyway, put that aside, because I don't think it was a bad message. But I don't teach. I just show you what I do. If you disagree with it, that's fine. Doesn't worry me, you know. I just want to inspire you to be better. And when I do talk to guys and one thing and another, I'm interested in what they do. And the reason I'm interested in what they do is because then I can help hone their style. Because everybody has a different style. I have mine, you have yours. Boy down the street will have theirs, the girl at the top of the street will have theirs. But there are certain ways to polish the strategies, and that's what I try and do. So the crux of this video is to why I scale the way I do and the target points I have. I base it on an ATR. And if you look at the ATR of the euro dollar, it's only around 100. It's normally somewhere between 80 and 120. And I look for a third of that. So if you split it down the middle or whatever, or come to a rough average of say 90, my overall target is 30. Because I don't want the bottom third, I don't want the top third, I want the bit in the middle. And that way it is safe. And that gives me consistent growth. And that's all I'm looking for. to be consistent. If I do 0.5% a day, every day consistently, at the end of the year, I've made a tidy sum. If I can get 5% a day, I have got a massive sum. But I don't swing for the fences. You see, I have this little theory about win rates and one thing and another. Unless your win rate is fixed, and what I mean by that is you have a set stop of 30, and every time you put 30 in, you're expecting to get 90 out of it. That is your positive expectancy. And you are only winning 3 times out of 10. That to me is not trading. That to me is gambling. Because you're only hitting the jackpot 3 times out of 10. So where's the skill in that? The skill is being able to trade and have the same win rate, or the same risk reward rather, but with a higher win rate. You have a high win rate and that similar risk reward, you're doing very well. If you've got an incredibly low win rate, your risk reward is going to be blown out the water all the time. Because inevitably what happens is your risk reward today is a stop loss of 30 to get 90. You might win it, so you got 90 pips. Tomorrow your risk reward might be 100 to get 300 and you lose. So you're down by 10. Kind of see the maths? So it's a variable. And because the stop is variable, your win rate and the way you work it out will never be accurate because no 2 trades are the same. So you have to be a little bit careful about what you're doing and how you're thinking about your trades. And like I say, when I do this million video, I'll go through that. Because trading isn't based on fixed statistics. It really isn't. You can have a positive expectation of thinking, well, I know I can get 10. I know I can do 10, 15 pips a day. Excellent. You get in and you get out. Then you do it again tomorrow. That's a different type of trading. It's a different style of trading. And for me, it's a safer way of trading. Because when you watch me, I'm risk-free pretty quick and I've been paid. And that's the way I look at it. All right. Yes, I get caught. I got royally caught last week. And if I held on to it, I'd have been okay. Which is one of the reasons why I'm going to go through non-farm payrolls today. So I hope that kind of makes a little bit of sense. I know sometimes I get off on a tangent sometimes. But the idea is there. You know, I love what I do. I really do. I mean, I'm at the screens every day. And I kind of just love it. It's as simple as that. Let's put it this way. I love the chart as much as I like coffee. And we all know Scruffy likes a coffee. So that might put it in perspective. You see, I'm not interested in the money in the slightest. You know, I don't need to be a millionaire. I don't particularly want to be one anymore. Brings a lot of pressures that you don't need. As long as I'm comfortable and I get my salary, and I do, and I can look after those who look after me, that makes me happy. So that makes me rich. Okay? But when you have somebody chasing money all the time, and all they're interested in is, I've got to make money, I've got to make loads of money, get me the money fast, they fail. And then they find that they're actually quite unhappy in what they're doing. Because they're stressed. They know they're a failure. And when they know they're a failure, they become a hater. And then when you're a hater, you lash out at people that seem to be successful. Because you're failing. Don't really get it. You know? And I saw a quote the other day. And it was very apt. Which is why I suppose the trolleys don't really get under my skin anymore. The quote was, "The haters don't matter, so the comments don't mean anything." I thought, what a great thing. That's exactly right. You know. So it takes work to be nice. and it takes work to be successful. So why not put the work in instead of putting the knife in? You'll probably find you're a lot happier at the end of the week. You'll certainly be a lot richer at the end of the week. And who knows, you might even get a friend. Oh, I nearly got off on one there, didn't I? Oh, I really did. The Popeye forearm was nearly there. Oh, hold on. Talking of Popeye's forearm. Hello? Can I help you?
Have a good coffee.
I've got a coffee. I have to make it. Do you know something, right? Talking of Popeye's forearm, right? My little Olive, this one here, left me to make coffee on my own. And I know why she's coming up. Because the kitchen's a bum site. Sorry. I'll make some money this afternoon. Is that all right?
That's fine.
That's fine, is it? Does that mean you're going to be nice to me?
I'm always nice.
Are you going to put the gold bikini on?
I don't have one.
Are you not going to wear anything? No. Sorry. I keep trying. See, the thing is, when you get over 50, you can do lots of innuendo, because I grew up on Benny Hill. For you youngsters, put it into Google. You'll have a laugh. Another one to look for is Kenny Everett. That used to be on Kids' Tea Time. They'd never get away with it these days. Never mind. Right. Run the trade. See where we are. And then I'll come back at the end. I'll give a very quick summary on that trade. It's exactly what I do all the time. And it shows the scale points. But it also shows how long a trade takes to play out. Because they don't happen in a minute. You might catch lucky on the open, but throughout the day they take hours. So you've got to actually do your homework. So we'll run that, and then I'll do a couple of minutes on fibs for Ian. And off we rock. All right? I'll see you on the other side. So there you go, guys. Trade's done. I've closed it off because it's getting on for 5:15 and I don't like running my day trades if I don't have to. It's gave me the target that I require, which is £200 a day. You know, that's roughly what I look for. A little bit more than that. It's pulled in a shade over 58 pips. But this is the bit where I want to pass on to the message that I had this morning. You see, it's very easy for a market to do 20 pips in a minute, like that. You know, it's dead simple. It opens, poof, out the gate, away it goes. Now, that burst of energy is unpredictable, and especially on a Monday. I mean, I was looking at this chart yesterday and I called it out to some of the scruffyites. And it's done pretty much what I said it would have done. You know, it went up a little bit before it went south, but it hasn't really gone far. And the reason it hasn't gone far, because when I'm looking on a Sunday, I'm looking for what it's going to do across a week. But you've then got to break that week down into a day, and then you've got to break your day down into 8 working hours, and then you've got to break those 8 hours down into sort of areas where I might get interested and all of this sort of thing. And that's one of the tricks of trading. Break everything down to its smallest denominator. Now, when you're looking for 100 to 200 pips, this market couldn't give you that, because today's ATR is 88 pips. That's as far as it's going to go. And check it out. I mean, here we are. It's the 10th of August. Look at the ATR and you'll see that it's sitting around 88, 89, depending on your platform. So my overall target was 30 pips, but I've pulled out 58. Kind of see where I'm going with this, guys. I analysed the market. I knew roughly what I could get out of it, and I hung on for bits that I might get a bit extra just by managing my positions, because I watched it come down, took a couple of positions out, it went back up to an area of interest, which was a marked point of a fib, and I'm going to get onto that in a second with cable. And then it came back down, but it didn't come down with any gusto. It just came down gradually. Now across the week it may continue its way south, which is kind of what I'll be looking at each morning. But it did what I said it was going to do. But it's taken all day. I put those positions on at around 8:20 this morning. You know, I was looking at it, watched the burst, came down, thought, right, okay, this is priming up. It's in the zone where I want to do business at. Off we go. And it's taken it till 5:15 at night to get there. And yeah, I can hang on to it and see if it'll get a bit further, and I think it probably will. But like I said, I'm not greedy. And that's what keeps me safe. Because I don't greed the pips. I don't look for the huge swingers. Don't get me wrong, if they're there, I'll take them. But I have a set criteria what I'm looking for. I follow it to the letter, and it pays me. And that's all trading is about. All right. So I hope this kind of answers the question you were looking for as to why I do what I do. You know, I'm in this to make money. You know, I know I said earlier that I'm not interested in the money. I'm interested in the wage that it gives me. I'm not interested in it making me millions. You know, listen to my final words of every video. Do what you love and the money will follow. And there's never a truer statement, because if you do what you love, you'll do it very well. And if you do it very well, the money follows you. You don't have to chase the money. If you chase the money, you'll find you're doing things that are stressful, make you unhappy, make you irritable, and ultimately make you fail. Okay? So that's just kind of Scruffy's wisdom on targets and markets. But as I promised, I'm going to jump back on the charts. I'll quickly show you my pip counter. I'll keep a run of it this week, because you guys like to see how it works. And then I'll jump on cable just a couple of minutes and I'll show you the fib and how pretty accurate it can be. All right, so come back with me. We'll jump back on the charts. Okay guys, so here we are. I've come back to the charts. I'll quickly show you the pip counter before I move forward. And today it's been pretty good, 251.75, pulling in 58.74 pips. Live with that for a day, And somebody asked, how do I work out how many pips there is with broken up positions? Well, it's quite easy. I add all of the position sizes together and then divide it by how many's cashed out. And that would give me a single position size. So in theory, it's as if I just put one position on, that's how many pips I would have achieved. Okay, so that's kind of how that's worked out. Whether it's right, wrong, or indifferent, doesn't really matter. It's, at the end of the day, the only thing that is important is this bit here. That target, and this one, because they're what I need to pay my bills. Simple as that. Okay, so it's been pretty good. I'll keep this running through the week and we'll just kind of see what's going. It's just nice to have little guideposts as to whether you're achieving your success or not, which is part of the journal, because I constantly look at the journal and I use it as a roadmap to see where I'm going. And I've done videos on them before. I might do another one just about how the journal creates a roadmap, because I do employ you to record your trades, why you got in, why you got out, how much you made or lost, and you'll start to see little patterns. But we'll go through that another day. So let's go back to Friday. Now, Friday was non-farm payroll day, a wildcard day if there ever is a wildcard day. But it's one of those news events that, for all it can throw the market about, there is some good opportunities in it, which is why even if I'm not trading on a Friday and I've no desire, I'll keep half an eye on it. And if I see something, I might have a punt. Now, a little bit snakebite fearful on Friday, because a lot of the time with non-farm payrolls, go into it full tilt because you want to be in and you want to be out. But I got royally punched on cable Wednesday and Thursday. So I was a little bit cautious with it. And what I was looking at essentially was, as you can see, starting the day before, it was on a solid sell-off. All right. So my overall thesis on the morning was down. And when a news event comes, I'm a big believer that prices are pretty much built into the chart. It might spike the market, but it very rarely turns the market. So you can watch it with a good eye and try and make some money. So I never traded at all on the morning, nothing. And I watched the price coming down steadily as it came into the lunchtime area. So there's 1 o'clock. At this point, I knew, because they are from 12 to 1, all the week traders and day traders that have been on the sell side, and there's been a lot of them, and you can see that because of the downward move, they're going to be getting out. And they're going to get out for 2 reasons. One, it's Friday and it's lunchtime. So that will liquidize their positions, getting ready to go home for the weekend. And it's non-farm payroll. So they will definitely be getting out, because nobody wants to be kind of in the market when that release comes, because anything could happen and it can smack any stop. So it'll spike the market up. The sellers will get out, pull the buyers in, up it goes. Basic stuff. So that's what happened. So I waited for that burst, and you watch it for half an hour up into the 2 o'clock candle, because this ends at 2 o'clock. That candle, that formation, where you've got a long tail to the top, short to the bottom, and a very tight body, tells you there's a sudden shift in sentiment. Okay, excellent. So at that point, I was ready to take a short because I had a fair idea it would slam down the overall trend. I put a quick short in. I didn't want to hold it because I didn't know how long it could go. So I got in, boom, 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 got out, and then I watched it. And I watched it come down, and it's a strong move down. And if you listen to what I say about strong moves and fibs, you know I like fibs. It's a good opportunity that all of this selling pressure is going to retrace, because you're going to have the quick scalpers, you're going to have the rest of the traders getting out for the weekend. Okay, so if I draw a fib from that point to that point, because there's a candle telling you it's the top, and you can follow it down, and I know there's a candle there, but that's the candle telling you it's the bottom, and I'll show you something with this in a second. 50% is the mark. So there's the top, there's the bottom, pull it across, and what do you know? Bang on 50%, almost to the pip. It's funny how this happens quite regular. Now you might get that wrong, all right? And this is the bit I kind of wanted to talk about. Let's just say you think this candle is your top. So you pull it down to there. And you think this candle is your bottom. And nobody would blame you for that. Solid, solid, move up. So you put that to the bottom. You can still get paid off this. And the reason being is, if you mark in an area where you want to be interested, so in this case 10%, so 10% up, you think, I'm going to go for this. You can have a target at 23 and 38 and you would still be paid. Simple stuff. All right. You could turn around and say, well, I'm going to go off the body. And I'm going to go off the body. So you've got them fibs completely wrong. But if you setting your stall out to be paid at 23 and paid at 38, let's pull that across. You'll have gotten there by the skin of your teeth, but you still would have been paid twice. And this is why I scale, because you don't know how far the market's moving. You might get your settings wrong. But if you have good scale points and you stick to them, it'll pay you. And that's what I do every day. And what I like about fibs is, no matter what you do, you could have said that one there. And again, I've got in there, would have paid you there, there, and there. It's all about managing the trade. Right? So sometimes you can draw the fibs in wrong, but once you've drawn it, whatever level you've decided, that is it. It is set in stone. You don't move them. And then you can have a trigger point, an exit point, an exit point, and an exit point. And that's how you use fibs to your advantage. You know, yes, the market has to retrace, and I do know that. But you have to watch how carefully the markets move. And what I mean by that is, yeah, that might retrace, but the chances is pretty much slim, because that's quite a slow sloping move down. It could easily just grind its way down. Whereas if it slams down, there's got to be something to relieve the pressure. And that retracement will pay you. And that's what you use your fibs for. All right. So I kind of hope that makes a little bit of sense. Like I say, it was little shout out to my friend over the wall up in Scotland. And don't be frightened of fibs. That's the moral of this story. Just don't be frightened of it. And if you get your fib wrong, you got it wrong. Don't panic. You know, nothing is perfect, but it is a good tool that does repeat itself on a regular basis. All right. So it's been a good day. Got some money in the bank. Got a good coffee. You know, been out in the garden, enjoyed myself. Got my beer. So I'm definitely enjoying myself. And now I'm going to go and watch another episode of Game of Thrones. So, Sir Chris, wherever you are, you know I'm meaning you. Sorry, it's an in-joke with one of the guys. I wish each and every one of you well. And remember, guys, do what you love, and the money will follow. See you all in the next one.